Welcome to TradingLounge and the European Indices for the 12th of June, and obviously we've had a bit of a sharp move down overnight, and I just really want to address the large account here before we go in and have a look at the detail. So we've been looking at this as wave 3 here, wave 4 here, then up for wave 1 and 2 here, and then 1 and 2 and 3 and 4 and 5 to make 3 here, then the A wave, the B wave, and the C wave here is an expanded flat, and then we've been looking for a move to the upside in terms of wave 1, wave 2, 3, 4 and 5 moving up into this space here for that, and that's fine. The inconsistencies here with relationships to the S&P 500, for example, is that this particular move through here on the S&P 500 had moved further down here, so we've called that a wave 4 on the S&P 500. So if that's the case here in some sort of A, B and C wave here, then we'd need to put wave 4 here. Anyway, it's worthwhile discussion that this particular move here, then that would leave 1 and 2 here and a nice clean 5 wave structure here. But we could get out of wave 4 here, I can see that from this little move up here and back here, we could look at that as wave 1 and 2 here, and then 5 waves up, 1, 2, 3, 4, 5 to the third wave, ABC back for the fourth, and then up for the fifth here to have this top in play here with this. The only trouble with that is that wave 1 here and 2 here, going up to 3 here and 4 here, wave 4 would overlap the top of wave 1 here. So that negates that count. So there's two reasons for negating having a fifth wave top in play here. But at the same time, we need to be mindful of things. It's not a perfect world. So I just thought we would just look at that for a moment in that space. So on the weekly chart here, I'm tying this in with the S&P 500. And if I just bring the S&P 500 up for a moment here on the daily chart here, we're viewing it like this from the wave 4 low now, 1 and 2 and 3 and 4 here, going back to our old count and then having wave 5 up here. So with that top in place here, we're looking for an A and a B and a C. Now, if that's correct, we're looking for an A and a B and a C, then that will just mirror through other markets around the world. But to confirm this, what we need to do is we need to look for 5 waves down here first. So on the S&P, and this will be the same with the DAX as well here, what we're looking for here is an A wave, a B wave and a C wave here. If we get 5 waves here, which is highly likely, then we're going to get 3 here back to the 50-60% retracement level or thereabouts. We'll track that. It will be in 3 waves, and then we'll get 5 waves coming down through here for wave C, taking us, well, we've got good support over at wave 4 here, so that might play out. The trick here is to track those 5 waves here, and then we can go into buying mode here. But to confirm this, we need to get 5 waves here. I won't go into that at the moment with the S&P. You can watch the S&P video for that, but for the DAX here, we want to move into this here and look at this in the same way we're looking at the S&P. It would just make sense. So wave 1 and 2 and 3 and 4 and 5 moving up through here. So we're looking here for 5 waves down in the A wave, which will probably bring us down to the medium level here, 11,500, and then 3 waves for the B wave here, and then another 5 waves down here, and obviously we've got good support deep into this move here. The 61.8% will be at the 10,000 area there. Just tune that in here roughly. So 61.8% brings us into that space there. But like I said, it's more important to track the actual structures rather than looking for the target area and confirming that. We should it's not good to get that into your mind. It may just come down to the top of these, and so on and so on. And first of all, too, before we can confirm this move here, we need to see 5 waves down here. If we get 5 waves here, then we'll get another 5 over here. So that's the beauty of Elliott. If we get 5 here after a 3-wave correction for wave B, then we'll get another 5 here. So let's drill in here. So let's just pull this across here. So we're looking for 5 waves down here, and then the B wave, and then the C wave here. So it looks like, I mean, this could just be an A and a B and a C and finish roughly around here and then continue to move up from that point. So we need to be a little bit sort of mindful of that. But, this really looks like sort of, 1 and 2 here and a nice 3rd wave coming down. So we need the 4th wave and the 5th wave to finish this off here. So let's go in and have a closer look at that. I need to go to the tick chart here rather than a 15-minute chart or whatever, just so we can get the detail of all of this. So it'll be a little bit messy, but not messy, but compact. We're just going to do this here. So from the top here, wave 1 down here, because this is all just the A wave here. So this is all of wave 1 here. There's 5 waves in here. I've gone through that, not a problem. Wave 2 here, not a problem. And then from wave 2 here, if I just get this here, I'll just get this into picture. So from blue wave 2, we're looking down for blue wave 3 here, which will bring us on to the 11,500, the medium level here. And between 2 and 3 here, we're looking for 5 waves. So 1 and 2 here, and down for wave 3 here, then wave 4, and then wave 5 here. So we can look at, pull this apart as much as we want. So before we do that, we'll take the wave 2 top here in green, roughly there, bring it down to this low here, roughly in here, and that's the 38.2% retracement level for wave 4. Now, of course, it doesn't have to move that high, but we need to be mindful of the closest largest number, the 12,000 here. So it may find that as a glass ceiling there, so just need to be mindful of that. But that's where it can come to at this point here. So we need to be mindful of that space there. So that's at 12,100, and we will be looking for an ABC, a corrective pattern to the upside there. We'll come back to that. So between blue wave 2 and blue wave 3 here, we're looking for 5 waves, 1 and 2 and 3 and 4 and 5. So wave 1 here, that plays out quite nicely. Here, if we could just open that up here. We've got wave 2 here, wave 1 here, wave 2 here, and then we're looking for 5 waves down. Really need to use a bigger chart, but basically 1 here, 2 here, and then this is just to show you how I've counted it down, because if you think you've got another count, well then it's good to compare, and it's good to get back to me and say, Pete, I think that you're wrong there, and what about this, and so on. So I'm very happy for anything that can help improve everybody else's position, then I'm happy for that. So wave 1 here and 2 here, and then going down for 3 here, and this would be wave 1 here and 2 here and 3 here. I know there's a bit of an overlap. No, it gets in there okay. And then down 5 little waves for 5 here and 4 here, and then 1 and 2 and 3 and 4 and 5 here for this one here. And then wave 4 being wave 4 sideways, a little bit complicated. Let's just check on this to see how far this pulled back, this wave 4 pulled back. I know it's in a different part of the structure, but so it was short of the 38.2%. So we should note that, and that would bring the green wave 4 back to the 12,000 area there. So just be a little bit mindful of that DNA situation. So Yeah, and then down here, we've counted 1 and 2 and 3 and 4 and 5 for 1 and 2, and yep, so 1, 2, 3, 4, 5 for 1 and 2. Take all this as 3 here, and 4 and 5 here for third and fourth, and you'll count 5 waves in this one down here. This little guy here is a little bit messy to the upside, but we can see that it wants to stretch a little bit higher here. Probably got 1, 2, 3, 4, 5 here. This is, I mean, it's just not worth trading up here anyway. But the wave A here doesn't have to actually. I mean, there's 12 different types of corrections, and when we talk about wave 4s, we can get any of those 12 basically. There's a discussion between 12 or 11, but who cares at this stage. This still needs to push higher here. Let's just sort of pop that in there and that in there, and I can see this is 1 and 2 here, then this is 1 and 2 and 3 and 4 here and 5. So this is 1, 2, 3, 4, 5. So the third wave still needs to come up here higher for this. Third wave up here, fourth wave here, and fifth wave up here, so to speak, and move that up here. And then the wave B will pull back in 3 waves, and then wave C here at the 38.2% retracement at 12.1. We don't need that. I'll just get rid of that. Yeah, so up here, back here, and up here. So one of the main points here is looking for 5. If we get 5 waves here, then we're going to get an A, B, C back here, 50, 60%. So we can draw that out a little bit here. Let's just assume that it goes to there, but we know what assuming means, so we've got to be a bit mindful, but just generally drawing out where this B wave could come back to, and then wave C. There should be some sort of relationship between wave A here and wave C, so some sort of equality between those two. And what you want to try and do here is count 5 waves in here for this. So I guess if it trades above here, one of the tricks that I use, allow it to be up here, and then when it comes back over here and gets locked under here, and you can see it's locked under here, then start putting in positions through here, because we want to be heading down to 11,500 at that point. And if all of this just fails and it drops here, then you can short it under that point here. And there might be some folks that are short in this market, because if we go back to the 15-minute chart where we were talking about it yesterday, we were looking for wave C of 4 here and this low here. So if the market had breached this point here, then you could go short from that point. So perhaps you're short at that point. So if that's the case, then you really just want to leave the stop out of the way above that 38.2% retracement level there, because market's obviously going to be moving down further from that point. That's at 154. Yeah, 154 is fine. Or either that or 157 would be just a little bit better. I think I'll just move that up a little bit, because it's not going to make much difference here. Just 157 would be the go. Yeah, so even though we didn't get the count right, you may be short at that stage. So that's all good. Okay, so just to recap this a little bit, this is where we are now in that bigger picture. So we're just pulling that apart here. So we're looking for a move down into 11.5, and then a bounce off that for an ABC. This will be in line with the US markets as well, and then down from here. So we're going to have a look at the FTSE, but I won't go into a lot of detail. We'll just go into the same sort of pattern that we're looking at here. Spending the time on the DAX is the same thing. So in this case here, we can see we've got wave 1 and 2 here, and we're in the third wave here, and the third wave's not quite finished yet, so that will pull down a bit further in here, and then have that wave 4 pull back there, and then down down into wave 5 here. So you could play a little bit more in here. If the 6,000 becomes the retested resistance there, then you can look for a short trade coming into that space. But I think that the trade overall will be, the other next decent trade will be this leg here. And we just need to observe this one here, and then we can look to start to drill in and move into this leg coming down here, especially this third leg here. And yeah, the other point too, I mean, if it's a really bearish market, well, then it can just continue to cascade lower. So it wouldn't hurt to have a short position in here, and we'll pick this thread up after Friday's session as well, and look at that, because it could just continue to cascade down. But we're looking at 5.8 for the low here on this, and should bounce off this old low over here for this. Because the extension's in wave 3, then wave 1 and wave 5 will be the points there to look at. The other thing here is 56.50 in here is another target area down. Well, that's also the 50% retracement level in here, so I'll just put that there as well. But that would be the next level coming down. But 5.8 is a strong number, as you can see, so it should secure that wave A there, even though it may come down further than that. It will come back up and it'll lock onto that. Alrighty, thanks for tuning in. Cheers.